My name is Tom Lindauer, and I am a banker at a community bank in Iowa, and I do anywhere from consumer to mortgage to agricultural and business loans. Yeah, I'm an example of a customer that brought his high school son in that had a couple car loans with us before, and always pays agreed, so good customers, and they were looking for a new vehicle, and started doing the underwriting with them, and the son could make a payment. He was only a junior in high school, but they ended up looking for a car that was around $25,000, and it basically took more than half of his biweekly income to make this car payment. Now, the dilemma was he actually qualified under our scenario for our debt to income purposes and within our loan policy. So originally we talked to him and ended up calling him back and asking the dad, I don't think it's such a good idea for you to put your son in a position of having $25,000 in debt and not even out of high school yet. Now, granted, dad was also going to be in the loan because he wasn't 18. I had to have somebody over 18 on it. So several different things. We could have just done the loan for them. We could have denied them. The solution I took was I offered them and I told them I would do the loan for you, been a good customer, but I would still advise against it. So how the whole scenario played out was he ended up financing it through the car dealer instead. So we lost a loan out of it, but I thought it was in my best interest to protect the son. If I were working for a different organization, maybe a national chain, they may not know their customers as well. And so basically they would go by the numbers, the debt to income, the loan to values. It would all get into an automated system, and the number would just be clocked out and approved, and nobody would have said anything probably. Especially in a community bank, there's always a balance between what you do now, but what you can make later. We have certain applicants that come in that we deny their application based on certain scenarios, but we always work with them and try to say, this is what you need to fix, here's what you need to work on. We've had several customers come back a year or 2 years later and do the same loan for them. They've corrected what we asked them to. So as a community bank, you want the long-term customers, the people to stick around, to come back with you, because you're going to be with them in bad times and they're going to stick with you in good times. I've actually had that both ways. I've had kids that, it's in the same scenario. So a younger person in their 20s and wanted to refinance a truck with us, and it was like $50,000 on truck, and he's just starting out, just renting his first apartment, and so just today qualified. I don't think he should. Well, he took all of his accounts and went somewhere else. He didn't like me advising him one way or the other. He just wanted it, and that was it. From a kind of a longer time ago, 12 years ago, they wanted to build a new house. They had bought some land out in the country. They came in and they had a lot of credit issues on their background. They were pretty tight debt to income. And I basically gave them a plan to do over the next 12 months. And within 2 years, they had their house built and were living in it and fell well within all of our guidelines. And they appreciated the feedback and have been with us ever since. Well, when I go home at the end of the day, I just hope that I've been able to help somebody throughout the day, whether it's good or bad news to them. Try to be honest with them and just tell them if there's a reason they're denied for a loan, why that is. And the people that have stuck around, you may do a car loan for somebody when they're 17 and may do a house loan for them when they're 25 because you've been with them. So that's what you like to see, is it younger kids coming up and really listening to your advice and taking it to heart and using it.